Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, New York City, we have Evan Harvey. He is the global head of sustainability at Nasdaq. And we're going to take a look at adhering to climate risk disclosures for businesses globally. Evan, it's great to have you with us as always. Tell us more about the Task Force on Climate-Related Financial Disclosures, or TCFD.
TCFD was created by the Financial Stability Board in 2015, reacting to a number of climate-related crises going on around the world and trying to build more resilience into the capital markets. So it focuses on corporate disclosure of environmental performance data at a level well beyond what we've done in sustainability reporting before. They published their recommendations a few years ago, and companies have been wrestling with it ever since.
So tell us about the workshop that Nasdaq hosted this week for Climate Week.
We hosted corporates and investors and standard setters and some professional services firms at our headquarters downtown, talking about the implications for TCFD and the practical requirements of reporting. So it was not only an introduction to what the TCFD framework is, but also how the marketplace is treating it. So are investors really caring about this? Is this another aspect of ESG that is sort of overweight right now, or is it just something, the flavor of the month? And the attitude in the room tended to be that this was sort of the future of climate reporting more than something that was an aberration.
Do you think adhering to climate risk disclosures will make an impact to the financial markets?
It certainly seems to. It depends on investors and their particular attitude when it comes to their emphasis on investing. There are certain investors that have a climate focus in their investing. They're trying to create climate-driven impacts in their investments rather than just a generic ESG or corporate responsibility lens. But we haven't really seen too much of an impact in the US markets yet that are specifically related to TCFD, and I think that's because the TCFD has many, many more supporters than it does reporters. There are very few data points actually getting into the system yet through the TCFD protocol.
Do you think companies that adhere to strict ESG guidelines really care about that, or is it more to keep investors happy?
I mean, who knows why companies do what they do? The companies that I work with here at Nasdaq tend to be true believers. They tend to find all kinds of systemic reasons for doing ESG, things that are measurable and have a dollar and cents impact in terms of retention of staff, efficiency of facilities, long-term energy and cost modeling. So there are values that are above and beyond what the investor might describe or need that cause them to do more ESG work in-house.
I have a question for you, though. How far do we have to go with ESG? This is a big topic of conversation on FinTwit and also financial media. The obvious alcohol, tobacco companies, technology company, you might have great governance, but it requires a lot of energy to run a technology company. Where do you draw the line?
I mean, there's a couple of things to unpack there. I think one, it's no longer a choice between returns and good ESG. You can have both. And investors from Morningstar and BlackRock and a number of other places have published studies recently that show that there's no real diminution of profits or returns by voting in ESG or investing in ESG. Second, yes, the tech companies tend to be over-consumers of energy, but they're also over-innovators on the technology side. So then not only are they creating AI and sensors and things that help us with our efficiency in our facilities, and they're doing wonderful things with data center management. They are huge scale consumers of green electricity and renewable fuels. They're also developing things like battery storage and capacity, which are going to help all of us down the line.
Yeah, I think that's good when you look at it that way in terms of balance and not just simply going all in on one concept and either has to be very black or very white. I think the balance definitely needs to be there.
Absolutely.
All right, Evan, thanks so much as always for joining me at Market Site. And thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.